Hi everyone, my name is Donna and I'm the owner here at Bookkeeping Made Simple, and today we're going to talk a little bit about the S-Corp. I've gotten a lot of questions about this. I've had to answer a lot of questions. I've had to tell people things they didn't want to hear about this. And so I thought I would just do a video and start talking about what it is, what are the benefits, and what are the drawbacks. Okay. So an S-Corp is just simply a tax designation by the Internal Revenue Service. It has its own benefits and drawbacks. It is what's called a flow-through entity. In other words, at tax time, the income and the tax liabilities flow through the S-Corp into the hands of the owners. And the owners are referred to as shareholders. Like every corporation, S-Corps are owned by their shareholders. And a lot of times one person owns 100% of the stock. So there's the owner and the shareholder are kind of the same person, but we still have to refer to them as the shareholders. Now, the biggest benefit to it is, one, you get the protections. A lot of states will allow you to set up a limited liability corporation or LLC. And then the IRS will allow you to be taxed as an S-Corp. That helps keep your self-employment tax down, because even though you are the owner of the S-Corp, you are considered an employee. So your wages from your salary do have payroll taxes taken out, just like any other employee. And your income from your distributions is taxed at the ordinary tax rate. And then if you decide to sell some of your shares to somebody else, and you earn a profit on that, that would be probably subject to capital gains. Okay. So as opposed to an LLC, a sole proprietorship, or a partnership, owners of the S-Corp are usually not subject to self-employment taxes. And I have seen that self-employment tax just to eat up a third of the income. So that's a really, really good thing to have. It makes it a very, very desirable entity to use. Also, as opposed to a C-Corp, C-Corps are double taxed. So they have to pay a corporate income tax, and that income is taxed again when it's distributed to the shareholders. So the corporation is taxed on its income, and then it's taxed again to the shareholders. In an S-Corp, it just flows through. It doesn't stop for additional taxation. So you have a lower tax rate overall, usually, not always, but usually, and you only have to pay on the distributions. Okay. So with all good things, there are some drawbacks. And this is where I've been getting a lot of questions. With C-Corps, these are the ones that you see on the stock exchange. They have an unlimited number of shareholders. They can have millions, and often do, have as many shareholders as they have shares of stock available. They also are not limited in the type of stock that they can issue. They can issue common stock and preferred stock and other stock and this other kind of stock. They are not limited on any of that. And probably in another video, I may talk a little bit about different kinds of stock, but it's not really relevant to the people that I work with. Okay, so the two big classifications of stock are common stock, which gives voting rights, and preferred stock, which kind of gives it, you don't get voting rights, but you do get first bite at the apple and after the creditors in the case of a bankruptcy. Common stock owners don't have that. S-Corps are limited to common stock only, and only 100 shareholders. They must be a domestic corporation. That means they must be incorporated and operating in the United States. And their shareholders must be US citizens or legal permanent residents. This is where a lot of people get tied up. I've had people call me from Singapore. They're setting up they're setting up a business. They want to be based in the United States for a number of reasons, which I have not asked them about, which is great. That means that I can work with them because I work with US-based corps only, or US-based businesses only. But they're Singaporean. They are not US residents and they are not US citizens. And then they want to set up a C-Corp and I have to be the one to say, I'm sorry, you can, or you can try and fill out the form. But the IRS will not permit that because it's against the rules. This is a special designation for US citizens and legal residents only. And even if you're a legal resident, if you take your residency to another country, you lose that ability to be designated as a domestic person for the S-Corp. When that happens, and it does happen, when that happens, then the IRS immediately and automatically changes the designation from an S-Corp to a C-Corp, which has its own, benefits and drawbacks, but that's usually not what a lot of people want to see. So I wanted to make that very, very, very clear. I've made the mistake earlier this year. I'd forgotten that S-Corps can only be owned by US persons. And I've had people say, oh, I live in Singapore, I have a business in the States, I'm not a US person at all, and I want to be designated an S-Corp. And I kind of woke up at 2 in the morning going, oh my gosh, that's why I couldn't do their tax return. They're not US people. And they are required to be to be part of this. So I wanted to talk about it a little bit. There are a ton of benefits to having an S-Corp. One is the flow-through entity. One is the ability to avoid some of the self-employment tax and only be subject to ordinary income tax on your distributions. And you only get taxed once. However, if you are not a citizen and you are not a resident of the United States, you cannot own stock in a C-Corp. I kind of want to go into the stock part a little bit because I don't want this to be too confusing, although it's a lot of information. Stock means a share of, we call them shares, shareholders, stockholders. It's a share of ownership. So if you have 100 shares of stock available in your company, well, then someone can take 1/100th or 1% of your company when they buy that one share of stock. If you sell 50 shares of stock out of your 100 shares, then you're giving someone half of your business in return for some good and valuable consideration. A lot of S-Corp owners own 100% of all the shares of stock in their business. And they may say, oh, we only have 100 shares and I own it all. And that's perfectly fine. So I do not want anyone to get confused between shareholders, stockholders, and owners. In the case of a corporation, the shareholders own shares of stock. They're also called stockholders, not stakeholders, which is an entirely different term, and they are the owners. So one of the nice things about an S-Corp is you can have it very closely held. You can have only family members own stock. You can do that with the C-Corp too, but in this case, it is a pass-through, so you don't get taxed twice. And depending on what the income of the various shareholders are, you can have a lower income tax rate. However, as their income goes up, maybe they're making $250,000 a year or more. They may then decide to be organized as an S-Corp where they get actually a lower marginal tax rate and they don't have to pay the large tax rate on the distributions on their stock. So there's a lot that goes into it, but I really want to emphasize shareholders and stockholders are the owners of a corporation. And in S-Corps, many times, there's only one person, maybe two, that own all of the shares of stock. Don't get that confused. They are still the owners of the company. They just get to be classified as employees for self-employment purposes, and they get to be classified as shareholders for income purposes, so that their income from distributions is only subject to ordinary income tax. And now I feel like I have just thrown out this huge word salad. Hopefully, I've made it as simple as possible, and you're able to understand it. But the big thing is, one, S-Corps can only have 100 shareholders. None of those shareholders can be a foreign entity or person. So if I own an S-Corp, I cannot sell stock to a corporation in Ireland. They must be US based, and they must be a domestically organized corporation or other business entity, or they must be a US citizen or a US permanent resident, and they must be legal. So that is it for this. I just wanted to go over this really quick. Again, I have some people doing sales for me that just don't understand that about S-Corps, and I want that to be very clear about foreign ownership of S-Corps is prohibited. So I will look forward to talking to you again in my next message, which I'm kind of doing as I'm seeing things that I'm getting a lot of questions about. That's when I really want to do a lot of kind of answering those questions. But if you have more questions about S-Corps, feel free to reach out. I enjoy hearing from my subscribers and from my viewers. Let me know what you're interested in, what you're interested in seeing, and I will just continue to do these as these questions come up. So thanks very much, and I will talk to you again soon.